Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Japan leads stocks higher in Asia as the BOJ headlines a big week of central bank decisions. Its negative interest rate policy likely to end tomorrow. China's factory output and investment grow more than expected, showing stimulus measures are helping, but consumers remain cautious. Plus, a defiant Vladimir Putin warns Russia won't be stopped from pursuing its goals after sweeping to victory in a tightly controlled presidential election. Let's check in on these markets then. A solid session over in Asia, as we said, bolstered by the gains that we're seeing over in Japan. The Nikkei rallying on expectations that the yen won't strengthen that much, even if a rate hike does come through from the BOJ tomorrow. Of course, that would be the first hike, the move higher, first hike since 2007, ending, of course, the negative interest rate policy. It's not guaranteed, but the expectation from BOJ watchers is it's likely to happen on Tuesday. European futures pointing to gains of 0.2%. Over in the US, S&P futures looking at 5,197, pointing higher by 0.3%. By the way, markets fading their bets on the Fed in terms of the number of cuts from just under 3 now. And in terms of NASDAQ futures, currently up 0.5%. We're watching the Apple story on Bloomberg reporting that potentially there is a partnership in the making between Apple and Gemini of Google on the AI front as well. So that could be consequential for Apple and the broader tech space. FTSE 100 futures currently pointing higher by about 0.1%. We have, of course, the BOE reporting and its decision on Thursday. The Fed, of course, but before that, it is the BOJ on Tuesday. Let's flip the board then, look cross-asset as we think about a week when central banks will be setting policy for almost half the global population. We look at the 10-year, currently 4.29, a move of 1 basis point. A lot of work done on the front end last week in terms of yields up around 20 basis points. Again, as markets readjusted to stickier inflation and pushed back and faded their expectations around just how many cuts will be coming through from this Federal Reserve. The Japanese yen 149 as we look at that rally in the Nikkei. Iron ore has been bumping around in the session. It crossed below $100 per tonne. It's now just back above that, 102, linking to the China data, currently at 2.7% on iron ore. Brent, $85 a barrel, up 0.4% after last week's gains, the strongest week we've seen for oil in about a month. Part of that, the geopolitics, the attacks on Russian refineries. But again, the China data coming in a little stronger than many had expected, and that is bolstering oil once again. $85 a barrel on Brent. Let's stay with that story, get more details on what's been happening, of course, with the Chinese economy. A positive start to the year then, with factory output jumping more than expected, up 7% over January and February. Retail sales, meanwhile, were up 5.5%. That number roughly in line with the estimates. Let's bring in Bloomberg's Rebecca June-Wilkins for the details on this data. Rebecca, is this a sign then that the stimulus measures that we've seen, the piecemeal stimulus measures, but nonetheless collectively not insignificant, that they are now finally working?
Well, certainly suggests that some of that supply-side stimulus that we've seen so far is allowing for this stabilization in parts of the Chinese economy, at least those outside of property, for example. Those industrial figures caught my eye, as in did those sort of fixed asset investment figures. Both of those came in comfortably above the estimates there. We also had manufacturing investment growth on track for its fastest pace since October 2022. So a lot of reasons to be positive. But I think the key element here is to really look at that muted, quite lackluster market reaction when we first saw that initial sweep of figures coming out. And I think it is really about this caution that the growth that we're seeing, the improvement that we're seeing, really rely on that old model that China is trying to move away from. Rely more on, for example, this trying to push in more money through investment into infrastructure and so on, without really tackling some of those fundamental issues about consumer demand. And while those retail numbers came in a little bit higher, there is also this context that perhaps that was really more about the activities, the festivities of Lunar New Year and those holidays and so on that helped sort of artificially bump up that number.
OK, so some of those underlying challenges, of course, remaining, as you point to, for this Chinese economy. What are you and the team then looking out for next, Rebecca?
Well, there was one thing that was missing that we were hoping to see today, and that was the youth unemployment figure. One of the more controversial pieces of Chinese data that we originally saw actually removed entirely from the database back last year, in the summer last year. Back then, there was a record high of young people, 1 in 5 young people struggling to find a job. Now, those numbers were revised and they came back. They removed the factoring in of people who were at school, and the number came in at around 15%. We were hoping to see that today. It didn't come through, but authorities have said that they are expecting to release that in the next couple of days. So we're keeping an eye on that. And the other element here, I think, and this speaks to this sort of consumer demand story, is whether or not we get more details about this potential sort of retail trade-in program. That was announced by Xi and has been reiterated in various corners of the machinery since then. Businesses and retail consumers encouraged to trade in their goods, and the central government is going to direct some portion of funds towards that, but we don't yet know how much.
OK, Bloomberg's Rebecca Chun-Wilkins with the details on the data and what to look out for in terms of the jobless rate and some of the further detail out of the Beijing apparatus in terms of the policy supporting some of those consumer sales. Rebecca, thank you very much indeed. Let's get the market reaction then and see how the Asian markets are faring this Monday. Let's bring in Avril Hong, who's standing by in Singapore. Avril, what are you looking at?
Yeah, we're looking at a positive reaction in the equity space in China. To be clear, it was a mixed bag, as Rebecca and you have been discussing. We saw that pickup for the industrial production print as well as for investment. And that seems to be what investors are focusing on, in spite of what we saw, that slight miss on retail sales, as well as the big concern from the property side of things. CSI 300 clocking gains of about 0.6%. Hang Seng also in the green. We're seeing offshore yen moving sideways for much of the session. Let's flip the board because I want to take you to some of the movers in the markets for China's equities today. We're seeing the Chinese authorities telling EV makers to buy local. That's propping up the semiconductor names. We also saw that earnings beat from CATL, the battery giant, so traders are also piling into the stock. We are keeping a really close watch this week on some of the companies on the Hang Seng Tech. We have Xiaomi that could unveil its EV ambition, but earnings as well from Meituan, from Tencent. Let's flip the board because, of course, it is also about the Bank of Japan and this speculation really ramping up. And it seems like the swaps market is pricing in fully that move from the BOJ tomorrow. Amid all this, though, we're seeing how futures as well as the 10-year seems to be reversing some of the moves from last week. Don't forget, we had the BOJ today coming through with a massive liquidity operation via the repos, and that seems to be indicating they don't want to tolerate any big fluctuations in the bond space. And regardless, it looks like it'll be a while, even if the BOJ moves tomorrow, before we see 1%, let alone 2% on the 10-year. Let's flip the board because amid all this, what we're really minding is the gap between the US and Japan. And the yen has been hovering still at the 149 level. We're seeing equities also still powering through those gains, accelerating towards the close on the Nikkei. And it's really about the fundamentals. So this is what we're seeing as we count down to the BOJ and the Fed.
OK, Avril, fantastic breakdown of the Asian markets this Monday. Avril Hong out of Singapore for us. Let's stay on the central bank story then. Of course, a major week for central banks. We had the Fed, the Bank of Japan, of course, among those set to make rate decisions that will affect half the world's economy. Economists see Fed officials holding steady, while the BOJ, as we've been discussing, widely expected to finally end its negative rate policy tomorrow. Not locked in, of course, but the expectation from BOJ watchers is that's where they will go on the back of that stronger wage data that we got out last week. Let's bring in Mark Cranfield then from Bloomberg's MLive to set us up on the central banking story and what it means for these markets. Mark, what does the setup then for dollar yen tell us about the BOJ?
Well, the traders have had lots of time to digest all this information, which, as we now think, is going to culminate in finally a change from the Bank of Japan for the first time in 17 years. And if you look at where the rate is, we're just above 149 for dollar yen. It was as though traders really are taking a very sanguine approach to the whole thing. They don't really fear that any move from the Bank of Japan is going to be so strong as to really ignite a fire under the yen. So it's surprising that we aren't quite a bit lower in dollar yen, but probably the reason for that is that it also is not just about the Bank of Japan, it's also about the Federal Reserve. So traders, of course, need to make a view on how does one central bank stand up against the other. So if you've fully priced in a dovish move from the Bank of Japan, yes, they may go to zero rates or maybe even a touch higher, but they're likely to accompany it with a statement which is very dovish for the future. telling us that interest rates are going to move only very, very slowly. And then you flip to the other side, where you've got the Federal Reserve coming up this week as well. And as you were saying earlier, there's a decent chance that they're going to reduce the outlook on the dot plots to only 2 interest rate cuts this year. That would be seen as a fairly aggressive move. And obviously that would underpin the US dollar. So that's where we are. We're standing at about 149, which suggests traders are more concerned about what they have coming up from the Federal Reserve than from the Bank of Japan.
That's really interesting. That gives us the important context, of course, around the rally as well, with Japanese stocks, Nikkei, currently up 2.7%, which, as you say, otherwise would look a little counterintuitive. But you've given us the context as to why that may be happening, given expectations around the yen. Meanwhile, with the Treasury story, Mark, we saw yields up, 20 basis points on the 2-year last week, one of their worst weeks across US Treasuries for quite some time. What was going on there?
Well, the reality is finally sinking in that the Federal Reserve really is going to take its time. It's a message that the Fed speakers have been putting forward for several weeks. Of course, not last week, they were in a blackout. But prior to that, there were several Fed voices who were very consistently saying there's no rush. The recent CPI data, the PPI data last week as well, all coming above forecast. It's all giving them plenty more time to go. We have a Bloomberg Economics report out today which shows that they've digested all these headlines, 900 headlines, which come from federal speakers in recent months. And it points to July being the earliest time when we could expect a lowering of interest rates from the Federal Reserve. Well, that's quite different to just at the beginning of the year. We're expecting even March would be a live situation for the Federal Reserve. Clearly, that's not the case now. So we've gone from, at one point, thinking we might get 7 interest rate cuts in the US. Now maybe we have to adjust to only 2 interest rate cuts, and even that is becoming a little bit questionable. So obviously the Treasury market is taking the brunt of that. A pleasant surprise for them this week would be if the Fed actually maintains 3 interest rate cuts in its dot plot outlook, but that's looking increasingly unlikely. We're more the case that they're going to reduce to 2, and even some people think the risk is they'll go to 1, but maybe not at this particular meeting.
Possibly from 3 all the way to 1 in terms of the dot plots. Bloomberg MLive's Mark Cranfield with important context for you. Excellent. Thank you, Mark, for that detail. To the tech story then, and a big day, a big week for Nvidia once again, of course, dominating the Mag 7 story and all things AI. Nvidia's annual AI conference kicking off today. Expectations very high for news that could boost it and other tech stocks, of course. Let's bring in Bloomberg's Jane Lanhee Lee for the details. Jane, what are we expecting to hear from Nvidia and Jensen Huang?
Right. Well, GTC is the development conference where it unveils its new products and partnerships. And there's a lot of expectation that it's going to unveil its next AI chip and platform that would speed up the AI model training. And so a lot of those specs are going to be analyzed by analysts and to see, how big of a jump is this? And how expensive could this be? And what kind of change will that bring? And so it'll be key to watch these aspects to see how this moves NVIDIA going forward.
OK, so from a conference that, frankly, few people have paid much attention to just a few years ago to a conference that's now been nicknamed the AI Woodstock. Talk to us about the context of this and the focus and the scrutiny of this event this week.
Exactly. I mean, I think it's fair to even say a lot of people in the U.S. didn't even know what NVIDIA was a few years back. But with the advent of ChatGPT, where AI really has become part of everyone's world, I have teenagers who came back that day and said, Mom, there's this new AI thing and, it can do my homework for me. And so now AI is part of our lives. And behind that are these NVIDIA AI chips, which have powered powered the data centers that have trained ChatGPT and other large language models. And so that excitement has really pushed AI to the forefront. NVIDIA, for example, this year already up 80%. It's a $2.2 trillion market capitalized company. This is somewhat unthinkable even a few years ago. And Jensen Huang, Here, where I am in Taiwan, he's a celebrity. He's got a gaggle of reporters following him everywhere, asking him what kind of noodles he likes. So this has really changed the company and changed AI chip hardware from something that everybody ignored to now it's center stage.
Well, and the next time we get you on, Jane, we need the answer around his preferred noodle type. I think that's essential to the Jensen Huang biography. Jane, thank you very much indeed. 2.2 trillion market cap, as you say, sniffing at the heels of Apple, which is currently around 2.7 trillion. We'll see if the AI story and the partnership with Gemini, the reported potential partnership with Gemini between Apple, could further propel Apple's market cap later today. Watch that story as well. But Jane Lee there, Lan Healy, on the Nvidia story and what to watch for at that event, with Jensen Huang, of course, giving the keynote speech later today. Here's what else is on the agenda, of course. Major week for the central banks. The BOJ rate decision comes on Tuesday. As we've been discussing, BOJ watchers increasingly think that the Bank of Japan will make that move then with the first hike since 2007, ending its negative interest rate policy, given the wage negotiation detail that we got out last week. That decision comes on Tuesday. The Bank of Japan is currently meeting. Wednesday, we, of course, have the Fed decision. Mark Cranfield detailing for us the forecasts and the update around the dot plots, which will be so important. They could move from 3 to 2. And then on Thursday, we get the BOE decision as well. Market's still pricing in the first cut from the BOE, not until August. We'll see if that changes on the back of the decision on Thursday. Widely, of course, expected to be held, but any details at the press conference will be important in terms of informing our views as to the Bank of England. Coming up, US-Israel relations hit a new low as Benjamin Netanyahu pushes back against Chuck Schumer's call for new Israeli elections. We discuss that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the European Union has pledged a €7.4 billion aid package for Egypt. The mix of grants and loans was announced by the EU Commission President Ursula von der Leyen during a trip to Cairo with leaders from Italy, Greece and Cyprus. The deal marks the latest push by the international community to buoy Egypt, which is seen as vital to regional stability. Switching focus to Israel and Gaza now. Israel's military has made its deepest incursion into Gaza City in about 2 weeks, targeting Al-Shifa Hospital, citing Hamas activity. It comes as Prime Minister Benjamin Netanyahu vowed to continue the war. He also pushed back against comments by US Senate Majority Leader Chuck Schumer, who last week called for elections in Israel.
That is totally inappropriate. It's inappropriate for to go to a sister democracy and try to replace the elected leadership there. That's something that the Israeli public does on its own, and we're not a banana republic.
OK, let's bring in Ethan Bronner then, Bloomberg's Israel Bureau Chief. Ethan, I guess a key question is to what extent this division, and it seems like increasing division between the US and Israel, could shift or will shift policy. On one level, it seems like the policy from Israel has not shifted in light of the pressure from the US. Is that likely to change, or is it changing under the surface?
Well, I don't think Israeli policy is going to change, but I think the bigger question is whether U.S. policy will change, right? Will President Biden, under such enormous public pressure and electoral pressure as he faces an election in November, actually start to turn the screws on Netanyahu and Israel and its policy in Gaza? I don't think it's clear yet, and I think it's also about timing. If the Israelis can sort of accomplish something that they consider a victory in Gaza fast enough, probably not. And of course, there's also negotiations going on.
On those negotiations then, Ethan, do we have any progress? Do we know what the detail is around those negotiations for the release of the hostages, of course, and the potential ceasefire?
Indeed. We do know a little something. The Israelis have declined to join these negotiations for the last week or 10 days. They are going today David Barnea, who's the head of the Mossad, the spy agency, will be going to Qatar, to Doha, in order to try to push this thing forward. So what has held things up until now is the Hamas insistence that whatever deal there is has to be a permanent ceasefire, and the Israeli insistence that whatever deal there is cannot be a permanent ceasefire. So it appears that they're working about a 2 or 3 stage process, in the first stage of which will not require a commitment to a full ceasefire, and therefore there could be an exchange of some 30 or 40 Israeli hostages held in Gaza for some hundreds of Palestinian prisoners held here in Israel, as well as a massive increase in humanitarian aid and a ceasefire of some weeks, about 6 it looks like.
OK, Ethan Bronner, Bloomberg's Israel bureau chief, with an important update, of course, out of the region. Thank you very much indeed. Coming up, oil pushes higher as China data beats and Ukraine steps up attacks on Russian refineries. We're going to take a closer look at the commodities space. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the other stories making news today. Donald Trump says he will hit Chinese car makers made in Mexico with a 100% tariff if re-elected. The figure is double what he previously promised. The presumptive Republican presidential candidate addressed Chinese President Xi Jinping directly in a rally speech in Ohio. Trump has previously proposed tariffs of as much as 60% on all Chinese goods and 10% on goods made in other countries. India has announced that general elections will take place over 6 weeks from April the 19th. The Election Commission says the 7-phase polls will be completed on June 1st, with vote counting on June 4th. Prime Minister Narendra Modi is bidding for a 3rd term in office, boosted by a strong economy and a weakened opposition alliance that's been struggling to put across a cohesive message. Here in the UK, Prime Minister Rishi Sunak is facing the same levels of economic misery that led to the Conservative Party's election defeat in 1997. The misery index, which measures both inflation and unemployment, is at its worst since John Major's landslide defeat. But it's likely to improve over the next 12 months as inflation eases, backing up Sunak's preference for a later general election. And prices for homes in the UK have risen at their fastest pace in 10 months. The online sales portal Rightmove says the average asking price was up 1.5% in March, month on month, to just over £368,000. Cooling mortgage rates have seen buyers return to the market, with Rightmove saying it seems that the bottom of the market has now passed. Let's check in on the commodities market then. Of course, a big day in terms of the data that has come out of China. It's a little mixed, but on the factory output gauge and on investment, you've seen a pretty strong tick up in the first few months out of China on the data that came out today. The retail sector remains a little cautious. Consumers remain cautious. But, of course, the read-through is there for the commodity space. Brent is currently up 0.4%. Part of that is tied to the slightly stronger China data, $85 a barrel after a very strong week, the best week in a month for oil last week. Crude WTI at $81 a barrel. Iron ore broke through 100 per tonne, now at 102, up close to 3% so far in the session. You can see the price there on copper. There's plenty more coming up. We now unpack the story around Vladimir Putin and, of course, that election, extending his nearly quarter-century rule into a 5th term with a record win in an election with no real challenger. That conversation is coming up next. The implications for Russia and the world. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Japan leads stocks higher in Asia as the BOJ headlines a big week of central bank decisions. Its negative interest rate policy looks likely to end tomorrow. China's factory output and investment grow more than expected, showing stimulus measures are helping, but consumers remain cautious. Plus, a defiant Vladimir Putin warns Russia won't be stopped from pursuing its goals after sweeping to victory in a tightly controlled presidential election. Let's check in on these markets then. As we've been discussing, central bank policy being set for almost half the world's growth in terms of economies. Of course, we have the BOJ decision tomorrow, the Fed, the BOE later on in the week. Of course, the Fed comes through Wednesday, the BOE on Thursday. Currently, you're looking at European futures up 0.2%. FTSE 100 futures pointing to gains of 0.2 as well at 7,773. S&P futures back below 5,200, but still pointing to gains of around 0.3% after 3 straight sessions of losses across US stocks. We look as well for Nvidia and that event later today with Jensen Huang making a keynote speech. Talking of tech, the Nasdaq currently pointing to gains, the Nasdaq 100 of around 0.5%. On the central bank front, when it comes to the Fed, markets now expecting fewer than 3 rate cuts coming through from that central bank. The details around the dot plots, of course, will be essential for these markets on Wednesday. Let's go cross-asset then and have a quick look on how treasuries are shaping up with an eye, of course, on the Japanese yen as well. The 10-year currently at 4.28, a move there of little or close to 2 basis points. You saw a 20 basis point jump in yields, a little over 20 basis points on the 2-year last week. So a significant sell-off, particularly at the front end, and we'll see how that story evolves this week. The Japanese yen, 149, expectations that the Japanese yen won't strengthen too much, even if you do get the first hike since 2007 tomorrow. And that view around a potentially softer yen is bolstering Japanese stocks today. Iron ore at 102, a gain of 2.6%. A little bit of strength coming through from iron ore after a very challenging week last week on suggestions that maybe the data is starting to prove, at least around the edges, a bit of improvement out of China. And Brent, $85 a barrel after its best week in a month last week, up 0.5%. Let's get to the geopolitics then and the story around Vladimir Putin and the election. Not a huge surprise, but nonetheless, of course, consequential, significant indeed. Vladimir Putin warning that Russia won't be stopped from pursuing its goals. His defiant words coming after securing another 6 years as president with a record victory in a tightly controlled election where he faced no serious competition. Let's bring in Bloomberg's Russia economy and government team leader, Tony Halpin, for the context on this. There was very little doubt that this would be the result. How is the Kremlin then adjusting to this result? What is the messaging that's coming through? What does it tell us about Putin's aims and goals going forward then, Tony?
Yes, good morning. Well, I mean, it certainly far exceeds anything we've seen in Russia's post-Soviet history. And it puts Putin really in the company of certain Central Asian autocrats in terms of the supposed devotion of his electorate. If you want to put it in context, it's 10 percentage points greater than his last result in 2018, which itself was a record. And the turnout was put at something not seen since 1991, when Boris Yeltsin won the election after the Soviet Union's collapse. So it's a completely different league. And it's intended to convey a message that Putin has a united country behind him. But clearly there are a great deal of doubt. There is a great deal of doubt about some of the results that have been seen in the country.
Well, Tony, just expand on that a little. You're giving us the context in terms of just how significant, or at least the size of this apparent support in that historical context, going all the way back to 1991. To your point, is there any real sense that there's opposition or pushback? What do we glean from what's transpired over the last few days?
Yeah, I mean, I think in many regions, what's called administrative resources were deployed to ensure that, for instance, state workers turned up and voted the right way. And in places like Moscow and St. Petersburg, which historically have been hotbeds of opposition to Putin, there were extremely high votes and turnout in his favour. All of that said, there's very little actual opposition on the ground since the death of Alexei Navalny in prison. Though there were protests at some polling stations yesterday, they were really quite marginal. And opposition to Putin has been effectively suppressed by the Kremlin, which has been cracking down on dissent pretty much throughout the whole war period.
OK. Bloomberg's Tony Halpin, thank you very much indeed on that important story, of course, out of Russia, with the Russian president saying he is committed to pursuing his goals, of course, on the back of that election victory. But, of course, with all the context, it was highly, highly controlled and essentially not in doubt. Tony, thank you very much indeed. Now, EU foreign ministers are meeting in Brussels today to discuss Ukraine and the situation in the Middle East. And, of course, we can't think Ukraine without thinking about Russia. The meeting comes after Germany and France called for the European Investment Bank, the EIB, to step up defence spending. Let's bring in Bloomberg's Oliver Crook in Brussels with the details. Ollie, talk us through this EIB proposal. How serious is it? Where are we in seeing that come to fruition? What could it mean on the ground in Ukraine?
Yeah, so the European Investment Bank is obviously the lending arm of the EU, and it's really sort of there to deploy capital to get through to Europe's policy aims, right? And one of those big policy aims recently has been defense spending and getting that back to sort of where it needs to be. So they launched part of this EIB, which is on defense spending, called the Strategic European Security Initiative back in 2022. There's about 8 billion euros in that part of the fund. However, there is a policy that is guiding this, that is basically that these investments cannot go to anything that is not dual use, i.e. both civilian and military. And to quote them from their page of what that precisely means, the projects we support require that the majority of the promoter's expected future revenue will come from civilian application. So when you're talking about artillery shells, bullets, guns, fighter jets, that does not have a non-military application. And so as a consequence, that sort of part of the defense realm is being neglected, and that is really where a lot of the money needs to go. So what they want is there are 14 countries that have signed to this. It's led by Germany and France, and they really want reform to this so you can have really pure defense spending going forward from the EIB.
Would it make, if that reform came through then, Ollie, as the French and Germans clearly want it to, would it make significant difference in terms of the support that Europe is able to give Ukraine?
So it looks like you have to look at it from a couple of different perspectives. So there's just the money side of it, right? So when you think about in terms of the volume of money that would actually go towards defense. When you look at the EIB's spending last year, where it deployed capital, it deployed 75 billion euros worth of it. Only 750 million of that was towards defense, right? So that was less than 1%. And then you also, an 8 billion in terms of that spending is not a huge sum of money. What it does do, however, it does help with the European Strategic Fund, which they put out this industrial strategy of wanting a more centralized view of where Europe and how Europe spends money on defense, how it does procurement, and to have it all centralized and a sort of capital arm behind that would be extremely helpful. And then there's also two signals. One of the signals we heard from the Saab CEO when we interviewed him last week, that if the EIB is putting money to this, it signals to big funds that they should be and can be making money and spending more in defense. But then there's also this question of the moral signal, Tom. We've spent a lot of time for many years talking about ESG. Where does defense, military, guns, and that sort of thing fit into sort of positive social impact? That was a very sort of dubious thing for a long time. But since the invasion of Ukraine, perspectives have shifted on that, and a lot more sort of ESG-facing funds are now investing in aerospace and defense companies.
OK, Bloomberg's Oliver Crook then on the calls for reform around EIB and the consequences of that potential signalling around the investment flows into defence. Ollie, excellent. Thank you very much indeed. Now to a Bloomberg scoop. And Apple is in talks to build Google's Gemini AI engine, artificial engine, into the iPhone in a deal that could shake up the AI industry then. Bloomberg's Kriti Gupta has the details. Kriti, what do we know?
Well, we know very little, but we are assuming a lot. Let me walk you through some of this. This is, of course, has to do with Gemini, the AI kind of product that Alphabet's Google had offered back in March of 2023. So it is still a fairly new product. It's only out for, let's call it a year here. And yet, in that year, they've managed to do quite a lot. For example, in January, Samsung had just rolled out their kind of offering with Gemini AI involved in it. Now Apple is trying to do the same. There are two ways to interpret it as, and first we should mention that these discussions are not official. They haven't been talked about. This is all off the record. And according to our reporting from Mark Gurman out of San Francisco, California is what we'll call it. But what's important to keep in mind is that there are two things here. One is that this could be a sign that Apple hasn't actually been able to develop their AI product that well. So there is that piece of it. The other sign is that simply there is a working partnership between Apple and Alphabet, and there has been for a while. Remember, Alphabet has been paying billions of dollars annually to be kind of the go-to search platform when you look at Apple's Safari, when you look at iPhones, iPads, even your MacBook. The first thing you pull up is that Google search engine. that costs money. So this is kind of this working partnership that's been in the works for a while. But in addition to the fact that perhaps Apple doesn't have that AI edge, there is a sign here that for Gemini, for Google, this gives access to 2 billion users worldwide. That is a massive number when it comes to just kind of getting the reach that Gemini has, and arguably on top of Samsung, which, as we know, Samsung and Apple, in terms of the actual smartphone market, are very big competitors. Samsung has the edge in a lot of emerging market economies, even periphery here in Europe, Spain, Italy, China, India. Samsung is the go-to. So that's going to be a lot to keep an eye on when we look at that working partnership and whether or not Apple can actually edge out or at least have some of that AI offering in some way. Because if you take a look at the stock, Tom, they haven't been in on the AI rally because they haven't had an AI product. This might actually change that. The one hurdle here is antitrust scrutiny from both sides of the company. We know that Alphabet's already focusing on lawsuits with the DOJ. Apple dealing with plenty right here in Europe.
Yeah, you can imagine those EU commissioners are waking up this morning to these headlines and taking a big look at this potential story. Kriti Gupta with the details on that Bloomberg scoop around the potential partnership between Apple and Google's Gemini and how that could reshape the AI landscape. Kriti, thank you very much indeed. Coming up, I'm going to be joined by Arend Kapteyn, the chief economist and head of economics and strategy at UBS Investment Bank. We're going to get his views on, of course, those key central bank decisions this week. That interview is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday. Now, it is, of course, a major week for those central banks, with the Fed, the Bank of Japan, of course, among those set to make rate calls that will affect half the world's economy. Who better then to speak to than Arend Kapteyn, chief economist at UBS Investment Bank. And Arend, I said to you in the break, I'm going to start with the Fed, but that was making an assumption, and I don't want to make that assumption. So I'm going to ask you the question as to which central bank decision is most important for you this week.
Well, it is the Fed.
It is the Fed, okay.
Yeah, so not that they're going to do anything, but I think what they say matters. The market has really swung to pricing a lot to pricing very little, and I think where the Fed goes, everyone else sort of goes, right? There's safety in the herd. Now, our assumption is they stay with 3 cuts for this year, mainly because we don't think the forecasts are going to really revise, maybe a tenth or so. And usually the dot plot goes where the forecast goes, right? So if nothing changes there, then nothing changes in their rate guidance. But I think at this stage, the data is so all over the map for the U.S. that it's unclear what the staff is briefing them. Is it a bullish story that everything is fine and there's lots of employment growth and we're going to have this no landing or soft landing? Or is it a bearish story where, you now have the sum rule triggering in 42 states and you have, the leading employment categories are starting to roll over again in the latest release. So I think it's unclear where I think the mindset is at the center of the committee right now.
On the data story, is this a new normal for us post-pandemic, that the data is just muddier and less clear?
Yeah.
Is there a period in time when we get back to the pre-pandemic relative clarity around the data, or is this the new normal for us?
Yeah, it's a bit like the Lehman echo we had. So for a couple of years, I think the seasonal factors just shifted, distorted everything. For 3 years running, I think we all got our forecast wrong post-GFC, and then eventually the seasonal factors catch up. I think that's actually starting to happen, right? You can see it in the claims data. For instance, last week they revised the seasonals. They're now much closer to pre-pandemic seasonals. So we're getting there, but I think there's still a lot of distortion, and it's not unique to the U.S., right? It's also in the U.K.
How vulnerable is the market, do you think, to a revision from 3 to 2 on the dot plots? Do you think that's priced in at this point?
I don't think it's that vulnerable to that. I mean, that's sort of neither here nor there. I think next year's guidance will be important, right? So they still had 100 next year. So if you take one out this year, what do you do next year? I think the main risk, if they don't change the unemployment forecast, I think you can hang on to most of the market pricing. The risk in their models is that unemployment starts to go lower because payrolls are running too fast, right? That is the risk to the market, because then the models will start to say, abort the cutting cycle, right? And that's not happening. So I think unemployment's sort of drifting up nicely to their forecast, so they can probably retain most of what they have.
What do you make from the relative? It seems like there's a disconnect, but what we heard from Jay Powell in testimony saying we're not far from the position where we can cut, from having that confidence versus the stickier inflation. That disconnect, it seems, with the rhetoric from the chairman, and the data. What do you make of that?
So not far for us means that they're going to go in June, right? I mean, he had ample opportunity to change that, and he didn't. I think also the other Fed speakers going into the quiet period didn't really say anything that suggested a big shift in their thoughts. The sticky inflation, I think there was, from our perspective, there was good news in the inflation print last week, even though it was quite hot, right? So the nervousness would have been, so everything that happened in the prior print in January was not supposed to happen, right? The residual seasonality optically was there, but it was in all the wrong components. And so I think there was a lot of nervousness on the part of the Fed staff as to whether something was happening that would carry over into the forecast. I think the February print confirms that's not the case, right? So most of the things that were anomalous sort of disappeared. Obviously, things are still running a bit too hot. But you can be quite confident that in March, things really step down because we know we get a very benign OER print based on how they sample that. So.
OK, so that was the good news within the otherwise headline stickier inflation print. And you still see June for the Fed. They cut in June. Let's switch focus then to the BOJ. They make that decision tomorrow. Is it locked in at this point? And how do you see the sequencing for the BOJ going from here?
So it looks locked in. If you look at the local press, and sort of we were talking about sort of the full page sort of Nikkei newspaper in Japan saying first hike in 17 years, it looks locked in. Now we had thought April. We last night published a note saying, well, clearly it looks like it's going to happen now, right? It wasn't just the Junta wage round. It was Kishida in Parliament basically saying, look, BOJ can go ahead. They don't need to wait for us to change the statement. So it looks like it's happening. The key uncertainty is not whether they go from minus 10 bips to zero. I think it's the JGB guidance, right? So if they abandon YCC but also eliminate the reference rate, which wasn't that clear until a few days ago, then the question is, well, what's your intervention policy, right? And so they're going to have to guide us as to what extent you want to stabilize the JGB market.
OK, so it's the expectation around yield curve control is that they drop that as they raise rates as well? Is that
we think they abandon it now. So a couple months ago, we thought they might phase it. So they would first end NIRP, so negative interest rate policy, then sort of hang on to the reference rate, then sort of abandon yield curve control. We think it all happens now, right? But the question then is, well, what is your intervention policy? On the ETF purchases, I think they just sit on the portfolio, do nothing, right? So I think they're going to have to send a clear signal that QT is nowhere on the horizon. It's basically managing the portfolio, and that's it.
So it's a dovish hike from the BOJ?
We think so, yeah. When
it comes to the Bank of England, Thursday is the decision. Markets still expecting the first cut not to come through until August from the Bank of England. If the BOE waits that long, do you think they have the ability to wait that long, to wait until August? And if so, do they have to do more if they're starting later?
So we have August as well. So I think they have to wait until August just because the inflation and wage data has not gone far enough in their favor. They're sort of going through the same inflation dynamics as the Eurozone and the US, except it started later. So they just haven't accumulated the sequence of improvement that I think you want to have in order to start cutting. Can they afford to wait? I mean, the economy is not going nowhere fast, so it's not that asymmetric, right? It's sort of symmetric in the sense if you wait, you are doing more and more damage, I think, for households who have mortgages resetting and growth is really sort of stagnant. But I think you just really cannot justify going that much earlier.
Are you seeing green shoots in the European economy?
I'd have to look really hard. A few things. So So the actually, I think it's very unclear. So the February data reversed, I think, a lot of the improvement we were seeing in some of the survey data. There is globally, including in the Eurozone, I think a bounce in the data bucket that is loosely related to consumption. Everything else still looks pretty bad. And if you think about things like the auto sector, then the backlogs are now completely worked off and, production should start to fall, right? So I think it's a mixed bag of, consumer getting better, trade still very weak, not really getting any positive spillover from the tech story in Asia. It's difficult to be very optimistic about where we're going.
OK, Arend, thank you very much indeed. Smart analysis, of course, on a major week for the central banks. Arend Kapteyn, the chief economist at UBS Investment Bank. There's plenty more coming up. Stay with us. This is Bloomberg.
We've been saying that the Bank of Japan is very likely to be tightening policies.
My view is that it will be a very dovish exit.
Market split between a March and April exit from negative rates.
Japan raises interest rate, the US goes lower, the yen strengthens a little bit.
I don't think that they want to risk any financial instability.
The stock market has performed very well on the weaker yen, amongst others. So that could take a bit of the zest out of that.
Yes, there will be hiccups, and it seems that these couple of months would be a little bit rough for Japanese equities, but at the same time, they can give you opportunities.
The money then leaves Japan. Where does it go? That's the interesting one. That could bring us back maybe to China.
Welcome back. So Bloomberg TV guests there discussing the BOJ, the Bank of Japan, in our latest M Live Pulse survey. Let's reflect on what's happening around the positioning in the yen then, because on some levels it seems counterintuitive that you're actually seeing the yen softening, and the bets coming through from the likes of the leverage funds and asset managers is that there's going to be further weakness for the yen. Further weakness, even as we expect a Bank of Japan to raise interest rates, if not tomorrow, then in the coming month or so. Of course, Bank of Japan watchers think it will happen tomorrow. We're just speaking to UBS's Arend Kapteyn. He thinks they will raise interest rates, the Bank of Japan, for the first time since 2007. He was pointing to the front page of the Nikkei over the weekend. He also thinks that they're going to scrap yield curve control. These are the short positions then building into the yen, despite the expectations that you'll get that rate increase. And the Fed, of course, is a big factor in that, particularly if they revise the forecasts in terms of the dot plots from 3 to 2, fewer cuts coming through from the Fed, a higher rate for longer from the Federal Reserve, strength of the US dollar, pressure on the yen, even as the Bank of Japan looks to raise interest rates. Here's the expectation then around the Federal Reserve. You've gone from almost 7 at the start of this year. Expectations you might get 7 interest rate cuts from the Federal Reserve. That has been paired by these markets to expectations you're going to get fewer than 3. Again, it's the revisions around the forecast on Wednesday for the Fed that are going to be so consequential. And, of course, the Fed story ties in to the Bank of Japan, as we were speaking about earlier. Let's flip the board and have a quick look on the 10-year, because the Treasury markets were reacting then to these expectations. The stickier inflation data out of the US and the commentary from Fed officials, and markets and the Treasuries reacting to that with a sell-off last week, particularly on the 2s and the 10s. And you saw an almost little more than 20 basis point move over the full week in terms of the 10-year. Yields up. Money moving out of US Treasuries on expectations that you're going to get fewer cuts this year. So that's the context you see towards the end of this chart. There is the sell-off in the US 10-year. We'll see if that story and how that story evolves, of course, when we get the detail on Wednesday. They expect it to stand pat, but again, it's the revisions around the forecasts that are going to be so consequential. Coming up later, Barclays Chief Executive C.S. Venkatakrishnan is going to be joining the surveillance team to discuss that UK lender's outlook and strategy plan. That's an exclusive conversation, 11:15 a.m. UK time. Up next, though, markets today. We'll be breaking down all the central bank action and setting you up for the week. Stay with us. This is Bloomberg.